Hi everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into North American Construction Group's Form 40F, a fancy annual report filed with the Securities and Exchange Commission. This time it's an amendment or correction, so let's see what kind of oopsie they had to fix. Did they forget to carry the one? Did someone misplace a decimal point? Let's find out. So right off the bat we see this is an amendment to their annual report. Basically, they're saying, oops, we forgot something in our original filing. These amendments can be anything from minor typos to more significant errors, so it's important to see what's changed. Okay, it looks like the big oops was adding a line to the auditor's report. They just wanted to mention that KPMG has been their auditor for a long time. It's not a huge financial restatement or anything like that, just adding a bit of history to the auditor's statement. Basically, they are just bragging they've been loyal to their auditors. Now, even though this is an amendment, the form still references all the original documents like the annual information form, the financial statements, and the management's discussion and analysis. These are key pieces to understanding the company's performance. The annual information form, or AIF, gives you a good overview of the company. It covers the business, the risks they face, and the industry they operate in. It's kind of like a State of the Union address for the company. The financial statements are where we really get into the numbers. These statements have been checked by an independent auditor, in this case KPMG. They give you a picture of the company's financial health, including their assets, liabilities, income, and expenses. Then we have the management's discussion and analysis, or MD&A. This is where the company's management gets to explain their performance, discuss trends, and highlight challenges. It's their chance to tell their side of the story. Alright, this section is about how the company makes sure the information they release to the public is accurate and reliable. They need to have systems and processes in place to catch errors and prevent fraud. It's all about being transparent and trustworthy. Here, management is basically saying they're responsible for setting up and maintaining good internal controls over their financial reporting. They're saying, we've got this, we're making sure the numbers are right. This is where KPMG, the independent auditor, gives their opinion on the company's internal controls. They're saying whether they think the company's controls are effective or not. It's an important check and balance on management. If there were any big changes to the company's internal controls, they need to be disclosed here. It's all about keeping investors informed about anything that could affect the reliability of the financial statements. Now, companies need to have an audit committee, and at least one member has to be a financial expert. That means they know their stuff when it comes to accounting and financial reporting. It looks like North American Construction Group has both Mr. Brian Pinney and Mr. John Polsel who fit the bill. This section is about the fees paid to the company's auditors, KPMG, and what those fees covered. It breaks down how much they paid for the audit itself, as well as any other services KPMG provided. Companies have all sorts of contractual obligations like debt payments, lease payments, and purchase commitments. This section summarizes those obligations in a table so investors can see what the company is on the hook for. Since they're in the construction business, they have to disclose any mine safety violations or other regulatory issues. It's all about transparency and accountability. Okay, before we wrap up, let's take a quick peek at one key number. The number of outstanding common shares. As of the end of 2024, North American Construction Group had about 27.7 million common shares outstanding. This is important for calculating things like earnings per share. Here's the cool part, the clawback policy. If executives mess up and get paid too much because of bad numbers, the company can take that money back. It's there to make sure executives are held responsible. Now let's zoom out a bit and think about what all this means. North American Construction Group seems to be a pretty well-run company. They fixed their mistake in a timely manner, they have good internal controls, and they are transparent about their operations. The auditor statement was pretty small in this amendment, so this is good. They have financial experts on their audit committee, and they are following the rules. Of course, like any company, they face risks and challenges. But overall, they seem to be in a good position. A potential downside could be any issues in the mine safety disclosures, as these are essential to follow. In conclusion, North American Construction Group appears to be a solid company in the construction industry. They are profitable and seem to have good policies and internal controls in place. However, it's always important to do your own research and consult with a financial advisor before making any investment decisions. Thanks for watching. If you found this video helpful, please like, comment, and subscribe for more corporate decoding. We'll be back soon with another deep dive into the world of SEC filings. Until next time.